Lyft is going public. Buy the stock early while you still can.
6 months later.
I just lost half my investment. What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset. The stock market is the most accessible wealth building tool for anybody with $100 and a phone. But just because it's accessible doesn't mean it's easy. That's why I want to go over 5 common stock market mistakes you need to stop making. So make sure you watch this video until the end so you don't miss a tip. But before we get into that, make sure you hit the thumbs up button below because investing, thumbs up. Why not? And subscribe to the Minority Mindset YouTube channel. That way you don't miss new videos every single week. First, stop following the hype. Roku is growing faster than Netflix did. When people hear that, the majority of people with a little bit of money in the stock brokerage account get really excited. Roku stock has been shooting up for months, and now the news decides to finally come in and report that Roku is doing amazing. Investors who never use Roku and have no idea of how the Roku business model works get greedy when they hear this news, and they don't want to miss out on this once-in-a-lifetime opportunity, so they start buying. This push of people wanting to get rich quick pushed the stock up 15% in just 2 weeks. And then reality hit and Roku lost 40% of its value from September 3rd to September 21st. Not again! The mass media is in the business of selling hype. They're not in the business of giving financial advice. By the time you hear on the news that a company is the next big thing, you already missed that rally. You need to pay attention to what's happening this week and filter out the emotion and invest on financials, which is why you need to buy stocks when they are cheap without trying to catch a falling knife. Buy stocks when they're cheap and sell them higher. It's a simple investing concept. But you're missing one key part. It needs to be a good company. Do you remember a company called MoviePass? MoviePass was supposed to be the future of watching movies in movie theaters because the way it worked was you paid $10 a month and then you could watch as many movies as you wanted in theaters. Well, MoviePass was owned by a company called Helios and Matheson Analytics, and the company was trading for $3,000 a share, and then MoviePass came out and said that they were struggling a little bit financially, and then the stock price came down to $2,000 a share. Buy low at $2,000 and sell it at $3,000. Well, MoviePass kept struggling, and then the stock price came down to $1,000 a share. Buy low, sell higher. Then the price came down to $500. Buy dirt cheap and get rich. Then $100. Hold! And then the company went all the way below 1 penny per share, all the way from $3,000 a share, which is why the company you buy needs to have good fundamentals. Do you know why investors love Coke? It keeps you awake. Investors love Coke because you can put Coca-Cola on the same shelf as RC Cola and charge $3 for Coke and $1 for RC Cola, and people will still run and buy Coke. And Coca-Cola has long-term contracts with restaurants, halls, movie theaters, and venues. That makes it really hard for a new company to come in and take Coke's spot, which is unlike something like Aeropostale, which sells clothes to teens. Fashion trends are changing like every 2 weeks, which is very expensive to keep up with. What you think about my new look, huh? And even if people love you today, they still might hate you tomorrow, which means you have no guaranteed revenue. That's why you want to make sure that your company is fundamentally sound, but you also want to make sure that your broker isn't making you broker. When you find a company you like, not only do you not want to overpay for the stock, you don't want to overpay your broker either. If you want to buy and sell stocks, you need to use a broker. And nowadays, it's very easy with the internet because there are a lot of online brokers out there where you enter in the stock you want to buy, you fund your purchase, and then you make this trade. But some of these brokers are going to charge you a commission to make each and every trade. But thanks to our sponsor Webull, not only do you not have to pay a penny in commissions to buy and sell stocks, but Webull is giving Minority Mindset followers a free random stock worth up to $300 when you invest $100. Webull is a super easy to use stock trading platform. All you need to do is create an account, fund it, and then you can buy and sell whatever stocks you want with a few clicks of a button. Don't want to spend all of your time in front of a computer? No problem, because they have a mobile app which allows you to check your portfolio, make trades, and do research right off of your phone. So if you want to learn more and get your free stock, I'll put the link to where you can do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. I mean, It costs $0 to make a trade. So if you want to learn more and see how you can open up your free account, I'll put the links in the description below. Fifth, you need a strategy. Buying what you think is cool and then selling when you feel like it is not an investing strategy. Warren Buffett says that he became successful as a stock market investor because he stuck to his strategy of buying stocks when they're cheap and then holding them for a long time. During the dot-com boom in 2000, everybody was making a killing investing in dot-com companies except Warren Buffett because these dot-com companies didn't fit into his strategy. During that time, Warren Buffett and his company lost 50% of their value while the stock market grew 150%. Everybody thought Warren Buffett was done for except over the next couple of years when reality hit, the NASDAQ got sliced into a third and Warren Buffett was back on top because he stuck to his strategy. My strategy is to buy whatever makes me money. And number 6, waiting for the perfect time. Every single market has opportunity, but you have to be willing to look, learn, and take action. Just because you want to buy low and sell high doesn't mean you have to wait until a recession to start buying. You just need to stay on top of what's happening in the finance and business world. When interest rates go up, bonds go down. When the stock market comes down, gold goes up. You need to understand how the market works. And if you're wondering, man, if only there was an easy way to stay on top of what's happening in the world, well, there is, because we created the free Minority Mindset newsletter where we first break down the top finance and business news and then we show you how this news affects your wallet. This way you can be smart with your money. Our newsletter is completely free and you can subscribe to it by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed the video, share it with one friend. And if you don't want to miss any new videos on entrepreneurship, business, and money every single week, hit the subscribe button and the little notification bell below. That way you actually find out when the new videos are released. And as always, keep hustling.